Welcome back to Small Caps, and it is our fortnightly wrap up, unwrap, and every other wrap with Tony Locantro from Alto Capital. I was going to sing, but I've been forbidden by Truth Bomb Tony not to sing. But all of you out there, drop a note below. It was Tony's 50th a couple of days ago. So happy birthday, my friend. Did you have a massive blowout party, or is it all COVID quiet?
Oh, it was COVID comatose, we can call it. I booked out a restaurant and was expecting 40 people, and in the end there was 3 of us. So
I cried.
Oh yeah, and I offered compensation to the guy that owns the restaurant. He said no. It was still a great meal, but if viewers can take away a lesson, some of my clients that were coming over from over east they didn't book directly with the hotel, and they've run into some huge problems trying to get their money back. So I guess the moral of the story is, if you've got the balls to book something, book it direct, because pretty much everyone had to cancel. So I just expected that, given the amount of time, it'd go ahead. And sadly, I had a trip to Port Douglas in the Daintree organised for 2 weeks, had to cancel that as well. Look, it's hardly a first world problem when we've got people dying, people that can't see their families. But, you know, I've got all these lineup of concerts coming. Guns N' Roses, VIP, November, probably sure.
November's going to be fine, Tony. November has to be fine, because that is when the Australian Gold Conference is going to happen. So don't you worry. November, I've told COVID to go away.
All right, we'll shoot COVID away. But yeah, anyway, no, 50. I still as immature as everything,
as ever.
I guess. You know, take my kids out and I feel like I'm their brother, and I like having some fun, especially on these sessions, Kerry. So far away.
Good. Well, let's get onto it right now. So as I said before, drop a note, say happy birthday to Tony, but let's get straight into it. Tony, markets you've been saying for a little while now, it could be anything that just creates a little bit of a sell-off in the market. There doesn't seem to be a massive sell-off. There just seems to be, they sound like they feel a little bit COVID-like. In other words, they're feeling a little off. They're okay. They're not doing very much, very lackluster. And I just wanted to know from you, is that normal for this time of year? Has it been tax loss selling, and therefore people are just sort of sitting back and absorbing what they've done, and then they'll take another run in a month? Or what's your take on the current market conditions?
Oh, lethargic is certainly the word to use. We've run into these periods all the time. You come into June 30, get quite a bit of selling. What's happened on this occasion is the sheer stupidity's come out of the market. We had periods there where stocks were putting on 500, 1,000% a day. We had day traders, pip traders, Tri-X traders, every single trader all over these stocks. And suddenly the interest has gone out of it. And the other point is we're at saturation. And I mean saturation on fluffy announcements where companies are just announcing getting a drilling rig or a contract, new IPOs with regurgitated assets. And a lot of these announcements really are not going to have much impact when speculators are tired and disinterested. So look, this is a speculative market. It's like music, which always reverts back to guitar, bass, and drums. It's going to get back to fundamentals, and there's that much rubbish out there that's listed, which will go back to being a shell. And this is perfectly normal. But, you know, if you look at the major indices, we've got the Dow just off record highs, S&P, NASDAQ. You know, I mean, it fell 2% overnight. We are going to have those corrections throughout. But as I reiterate to my clients, markets can still drop from undervalued levels. So just because we're up high doesn't mean we have to have a crash. But, you know, with inflation, stagflation, it's the economic equivalent of being sandpapered to death. And we could have a multi-year bear market in the major stocks. Well, it was in the 70s.
I got to interrupt you there, because you say that, But governments around the world, especially with COVID rearing its ugly head yet again, and stimulus coming up yet again, which adds more liquidity into the market. And by the way, this is not taking away from people that are hurting, that are doing it tough. Small business is really doing it tough. But governments are throwing money at the issue, which creates liquidity, which I would have thought keeps the stock market on a high, which makes everybody feel like they're doing okay.
No, I'm going to disagree with you.
Okay.
Markets can fall when I don't think earnings are going to match expectations. Ratios are too high. You cannot create earnings through stimulus, and markets will simply get tired and they'll roll over and they'll undergo a period of dropping. No amount of stimulus is going to change that.
But with the mining, sorry to interrupt you, but with the resources sector, and governments are spending a lot on infrastructure, doesn't that bode well for some of the base metals and some of the iron ore stocks and things like that? Because while governments are increasing spending on infrastructure, I would have thought some of the resources sector will be doing quite well over the next decade or so.
Well, there's talk of major copper shortages. Admittedly, a lot of the world's copper now is 4,000 meters above sea level and it's low grade. There's talk about how much copper goes into electric vehicle. There's talk about zinc, there's talk about nickel, but we've had these stronger for longer calls in the past. So no, I think markets will start, we can have markets that fall. I think, you can look at all the infrastructure spend. It's not going to stop people from selling stocks. It's not going to stop commodity prices from coming off. At the moment, the Australian gold producers are absolutely spitting cash. I mean, the Australian gold price remains healthy, but you can still have a vibrant gold sector with a much lower gold price. So that's been, with iron ore, but once these markets start to taper off, things are going to get difficult. But I just have this view that there's a lot of psychology involved. And I don't think handing people money or JobKeeper or whatever schemes are going to keep markets inflated. So no, I don't think there's much support underneath. And once this COVID cloud wears off, watch out. Really, as I've said before, we're heading for dark economic times. We've got the construction industry, which is under all sorts of pressure. Small businesses. People aren't going to start madly booking holidays because the chances are, you say, well, I'll go to Adelaide or I'll go somewhere else. God knows why. And then suddenly your trip's cancelled. So I just think we're going to go into a period where people aren't going to risk booking a holiday. And then they say, well, why don't you spend your money here? But you buy crap you don't need to impress people you don't like. So I just can't see this going on, Kerry. And when it ends, it's going to end badly.
Okay, so I'm going to ask you two questions. One, just put in the back of your mind regurgitated assets, because I want to come back to that. But in the meantime, while we're talking about the fact that the market you feel could be, in for tough times, what's your recommendation to people? Do they go long cash? Do they sit on the sidelines? How do you make sure your hard-earned cash and your wealth is being protected in these very volatile times? And as you say, it can happen very quickly.
Yeah, I don't duck and weave market volatility. What I've found is through advising for 23 years, there's always stocks that are going to outperform, and markets are always going to correct from high levels, low levels. So what I do with my clients is we build a portfolio of small cap stocks and we just stick with it. You can't judge when the Dow will fall, when the ASX will fall, when they get good news, bad news. What I've found is if I try and it's like throwing everything into a soup. If I study every factor, I wouldn't buy a single thing. So what I do is just stay really focused on the company. And at some point, a client will be down 30 to 50% on that stock for reasons outside of our control or one disappointing news item. So no, I've just found out the best way of doing it is to plow through it, because a lot of these stocks that start at 5 cents that end up at $2 or higher are going to have some nasty corrections along the way. And, in hindsight, they're easy holds, but, judging by the action over the last few days, they're not.
Yeah, and that's what I was going to ask you as well, because you mentioned earlier regurgitated assets. For the uninitiated who's bombarded with information, and let's just take a sector I know, the gold sector. How do you know the good, the bad from the ugly?
Yeah, well, a regurgitated asset is an asset that it's like pass the parcel. Like a company might have a gold mine that it could send 3 or 4 companies broke. Then suddenly it comes into a new IPO and they say, well, it's got fresh eyes on it. And then chances are that goes into production, sends another company broke. So what I've done is had a lot of experience looking at mining projects from 25 years ago, and I'm looking for ones that are still problematic. If a lot of companies can't make an asset work, then, but again, you might have assets in vanadium, lithium, tantalum, nickel. So, there's a lot of new IPOs hitting the runways at the moment, and it's a crowded runway. So a lot of these assets have been in other hands. You just got to judge the management. You've got to judge the share structure. But one of the trends coming out at the moment is that these companies are listing with very low enterprise values. And enterprise value is pretty much your market cap less your cash.
Yeah.
And some of them are issuing prospectus shares where no one gets cheapies. So that's the latest sales pitch, rather than having a porn star promote your company, which is probably, it's better financial management, but it doesn't mean the assets are good just because everyone pays the same price. So buyer beware.
Buyer beware. Well, let's talk about buyer beware, because we've got Biden in the White House and we've got the green economy coming out. Is there a sector at the moment, Tony, because I know that you cover resources and biotech, is there a sector at the moment, whether it's tech or biotech or resources, that you're looking at and thinking, people haven't looked at this for a while? Is there something that's starting to take your fancy at the moment?
I tend not to try and jump on the next bandwagon that comes by. The hydrogen stocks, have done extremely well. Twiggy's obviously heavily involved in it, so that they've all had quite a big run. But I mean that hydrogen.
Sorry to interrupt you. And for those of you that might not know, you'll think Twiggy is a stick. It's not. It's Andrew Forrest, who built Fortescue Metals Group and is now going off and looking at the green economy and saying that hydrogen's a good thing. So sorry to interrupt you, but for those uninitiated that don't know, Twiggy's not a stick.
Yeah, no, he's a real celebrity over here. But what I've found is, let's look at uranium. So we had a couple of uranium stocks I put clients in not that long ago, and they've both done 500-600%, and the uranium hype is non-existent. So that's just showing. I just think focus on the good companies, and if the bandwagon comes your way, then you've done well. So look, what I'm looking at is always keen on gold and silver.
That's my boy.
Well, that's it. You can always have good companies. You can always have a good base metals company. Any biotech that has a promising drug or diagnostic, you can look at as well. It's just a case of looking at...
That's a lot harder. Sorry, Tony, I'm interrupting you again, but, biotech stocks are a lot tougher, aren't they? Because you say it's a crowded marketplace. Oh, my goodness, that runway is littered with the deaths of biotech stocks in the past. How the heck do people that are sitting out there that are not your whatever you call it, clients, how do they pick them? Space.
It's tough. And I guess go to conferences, listen to all the Zooms coming through, all these webinars. There's just absolute shitloads of them, Kerry. I don't know where to start. I've given up unsubscribing from everything now.
Don't you unsubscribe to my virtual gold conference?
No. But look, it's tough. And unfortunately, many new investors or speculators have to go out and lose money for 5 years. That's the way it is, because you're relying on tips. It's really tough, but I'm just starting to, I've been doing it for a long time, develop a feel for what companies are going to offer you that decent chance to be successful in biotech. But the easy part, it's much easier for a gold company, which can just go stab a few holes in and keep going, keep raising money, keep the lifestyle going. So, there's very few companies that will go out, and I call it drill and kill, which means drill a project and walk away from it. So look, it's a tough market. What I'm looking at now for my new clients is it's like a rock group, giving them a bit of a rhythm section, which gives them some solid stocks that I think look obvious as growers, and giving them a bit of risk around the side. So that's probably where I'm setting portfolios now.
No, but not in across the board. So not in a specific, like as I said at the start, you're not saying, you know what, biotech is strong right now when things are looking a bit wobbly. It's across the board. You're looking at, here's a company with good fundamentals, good opportunity, doesn't matter the sector.
No. So that's what I'm looking at. I've got my favorites. I'm probably due to print out the share pages from the AFR and attack it with a highlighter. And I think that's the best way to come up with some new ideas. I have been involved in a couple of new IPOs, which look good from a medium-term perspective. So I'm doing that. And then no doubt I'll be working on some capital raisings. But look, you've just got to plow through this market volatility, market lethargy. The world's just now full of flinfluencers, we call them. And we've got this new breed of people that are young, attractive, wear bikinis, and are pushing investment stuff. And, it just leaves us old people behind, Kerry. But
steady on, call yourself old. I'm feeling very young, number one.
Yeah.
And number two, I haven't seen any blokes in bikinis lately.
Well, okay, no, it is quite sexist. Sex sells, but it's just the trend now. It's suddenly we've got youth coming into the market to lose all their hard-earned money.
Yep.
And things are changing, but it's the old crusty speculators that buy low, sell high, stick to it, that do well in the end. And a lot of these stocks and investment classes and scams are going to turn to complete shit. And then we'll go through another cycle where it'll be all social media driven as well. So very challenging market at the moment. And I don't, those starting out really have to make the decision who they follow and do they rely on tips, because a lot of these stocks aren't worth what you're paying for them. Okay,
well, we are in the first weeks of the new financial year. Last year was pretty good for the share market. It hit all-time highs. If you got out of the market at the beginning of last financial year, you'd be hurting this financial year. What you're saying, if I understand you correctly, is even though the market's going to be volatile, there will be some ups and downs. You've got to figure out which are the better companies and stick with them. If they're a good business, they'll get there. However, there might be some pullback. Strong hands are what you need in a market like that. Would that be correct?
Oh, bingo. And that's the way it's always been since markets were invented. Strong hands, good companies. At times, you're obviously going to take profits, but that's individual capital management, and that's what I deal with my clients. So, but I tell you what, there's a lot of the population out there with zero financial literacy, and it's all about to hit the fan. So, I'm probably one of the most intense researchers out there, probably one of the most experienced based on the number of clients I've had, and it's a tough business. Yeah, it is a tough business. You said earlier, music to my ears. Yeah, you're still like the gold and the silver. Have to bring it up. I'm known as the gold nerd. What's the gold price? It's over 1,800 US now. It seems to be holding there. I've always said that I think the second half of this year will be very good for gold. I'd love to hear your views, if you have some, on the gold and silver. Silver, a lot of people talking about, silver's going to the moon, but you know what? Silver's very lackluster.
It doesn't seem to be holding as well as gold at the moment. Gold equities, physical gold, what's your view on the market at the moment?
Well, I think the key with the gold sector is always to look for the next growth opportunities. So let's put that aside. The 2,400 Aussie plus at the moment. Some of these companies with all-in sustaining costs are making $1,000 an ounce plus, so that's good. I will probably get to see some M&A as well. Now, look, this argument is for someone else to fight over it. Inflation, stagflation, deflation. I mean, that's the argument, and there's cases for and against gold. But again, if you buy the right company, you should do okay. And some of these gold companies that are spitting cash will look to acquire ounces as opposed to trying to find them. So I think the sector will always be around. I think with the demise of some other asset classes, it could come in for some decent attention. And I've always got to have the view that you have to maintain some exposure to silver just in case it does go to the moon.
Producers, developers, or explorers in the mining space?
I like to find explorers that move towards production. I think that's where the greatest upside remains. When you get into producers, there are production risks, and sometimes their qualities will disappoint. So what I'm doing now is focusing on growth opportunities, trying to find the next Ramelius, the next Mini Northern Star, and other gold companies similar. But you've also got the ones that might drill into something exceptional on the grade front and multi-bag from there. So I enjoy that sector where you can look at buying a company that will expand its resources or could be one drill hole away from glory.
All right. Now, as I always say, this is not financial advice, ladies and gentlemen. As Tony said, speculation, you've got to do your own homework. You've got to do your research. Tony does a lot of research. So when he talks to you, this is not financial advice. This is a volatile market. You've got to make your own decisions. And you've also got to talk to your own financial advisor because it's not for everybody. Tony, got any last comments about maybe a company or two that you're following, or do you not want to cover that this week?
Let's keep it general. I'm still picking up a few stocks for people on weakness. So next fortnight, let's run through some of my hopefully greatest hits.
Well, you heard it straight from Tony's mouth just then, ladies and gentlemen. He's not giving away anything this week. He sees a little bit of market weakness, but stay tuned because in a fortnight's time, maybe he'll share one or two tips with you. Tony Locantro from Alto Capital over there in Perth. You're not in lockdown over there, are you?
No, free from lockdown, free from masks. Until some idiot stuffs it up for all of us. So we should see.
Not in succession yet, but still part of the island of Australia or the penal colony of Australia. Tony Locantro, thanks for joining me on Small Caps today.
Absolute pleasure. Look forward to the next one.
See you in a fortnight, my friend.